Hi, everyone. My name is Daniel Tarockoff. I'm a partner at Bind Ventures, an early stage venture capital fund focused on the psychedelic space. Today, I'm going to talk about this symposium's on psychedelics and their transformative power in a variety of different topics. I'm going to talk about how psychedelics have started to transform and will continue to transform how we approach capitalism and how we approach the way that we finance different projects in the space. So I'm going to start with just a very basic venture capital 101. What is venture capital in general? And it's just one type of financing that can be applied to different industries, not core to psychedelics. It happens to be really good for early stage companies. It's a type of financing where typically venture funds provide upfront capital in exchange for equity ownership in the companies. So provide the money and then own a % of the companies that they invest in. And it's an inherently risky class of investment. So a lot of venture funds kind of go in knowing that a lot of their portfolios just aren't going to eventually make it and will fail, and kind of rely on this idea that 1 or 2 or 3 of them will go on to be these home runs that can return the whole fund. And because of that high risk tolerance, it happens to be a good asset class to apply to these frontier spaces where other traditional investors might be afraid of wading into, just given the risks that are involved. And if you're outside of the business world, you might not be super familiar with venture capital itself, but you're definitely familiar with venture-backed companies. Some of the most globally recognized brands out there were started by venture seed funding. So I want to also walk through sort of the traditional flow of how venture funds work and how they make money. So it starts with investors. These are high net worth individuals, foundations, family offices that put money into a venture fund as a part of their portfolio. So in this case, $1 million going into this venture fund. Then that venture fund takes that $1 million and it allocates it across a portfolio of companies in exchange for a % ownership of those different companies. And the idea is that over a time frame of about 5 to 10 years, you can grow the value of those companies, and that 1 million becomes something much larger, in this case, $11 million. So then what happens to that $11 million? First thing that happens is that original million that the investors provided to the fund goes back to the investors so that they're made whole. And then you've left over with this 10 million in profit. And the traditional way that venture funds split up that profit is 80% goes back to those investors that initially seeded the capital, and the venture fund managers take home 20% of the profits. And one of the things that's not immediately obvious, but implicit in this type of funding model, is that the pressure is really on for the portfolio companies to turn that $1 million into $11 million. So they have to generate a lot of value over this time frame, and they feel that. And especially in today's environment, VC-backed companies are really feeling that pressure and waking up to the fact that venture capital is a very expensive type of capital to take on. It's not the only source, and depending on the situation, it might work for some organizations, it might not work for others. But it certainly has this embedded pressure on the traditional model to force these companies to grow at a very quick pace. So how does this apply to psychedelics, and do psychedelics need venture capital? Before I answer that, I just want to point out something that's very interesting about the psychedelic space in general, which is that nonprofits have a very outsized role in this industry. And it's a very unique feature that you don't see in pretty much any other industry. When we first started looking at this space in 2019, 4 years ago, nonprofits had raised more than any other category in this space. And that's just unheard of if you look at any other industry. Just 2 years ago, they had retained the second position of capital raised, just behind drug developers, as the industry started forming and companies started entering. And now you can see today that obviously drug developers take the lion's share of the capital that goes into this space. And you can see that nonprofits are beginning to fall further down in that relevance in terms of money that they raise. But I'm not actually trying to show that they're falling down in relevance, but actually the opposite, that they continue to have a really outsized influence, and that's a unique feature. If this was any other industry, nonprofits wouldn't even really be on this chart. So do psychedelics need venture capital? When we first started looking at this space, there were 6 companies, and it has completely ballooned over the last 4 or 5 years. There's now over 900 companies in the space. We do an industry analysis at Vine every year where we painstakingly go through and add all the companies that are popping up in this space and categorizing them. And there's just been a huge influx of companies. And a lot of these companies are venture-backed companies. And most of the largest companies are all venture-backed companies, including now the largest nonprofit. And so venture has entered the space, and it doesn't mean that every aspect of the psychedelic space needs venture financing to succeed, but different parts rely on it more. For example, drug developers, the FDA process for drug approval, and in Europe, the EMA process, in Canada, Health Canada, these are very expensive processes to go through to develop the clinical trials and to get through to a commercialization point. It can sometimes take billions of dollars. And venture funding, especially in a space that's frontier, that doesn't have the traditional type of support, is one way to really seed these types of companies and bring them to market. So what is the impact of when venture capital enters this space? What happens? As I mentioned on that first slide when we went through the flow chart, when you start funding with these types of models, the pressure gets built on these companies to grow at all costs. So you start seeing an acceleration of the industries that venture enters into. And when you enter into a space like this and things grow very quickly, you have to think about the trade-offs of what happens when you start accelerating an industry like this. And there's two kind of sides to this coin. On one hand, maybe a lot of you are familiar with an organization called North Star. If not, give them check them out. It's a really great organization. And in 2019, when this space was first unfolding, they published a story called "We Will Call It Paula." If you haven't read it, highly recommend you do. It's a great kind of look at how things could go wrong if this space grows too quickly, creating this dystopian, hyper-medicalized future where everything is extractive and you're just at a growth at all costs type model. And so when you grow too quickly and you apply this type of model, that's a real concern and has real drawbacks and considerations at stake. Now, on the other hand, we're in a mental health pandemic. And psychedelics are not a cure-all, but they are a tool for healing and can help a lot of people who are real people who have real suffering, and that real suffering is happening today. It's estimated that 1 in 5 people have a mental health issue. This was also a stat from before COVID, and latest figures are showing almost double that. So 40% of people that are struggling with their mental health, we have solutions that we know that work and that we can apply to people. And so maybe there's the real truth is that we couldn't scale quick enough to bring these medicines to people. And I don't have the right answer on this, but it's just the trade-off that we're dealing with. I do want to dig a little bit deeper into the "We Will Call It Paula" story, because I just think they did a great job of illustrating the dystopian side of this and raising some of the concerns and issues that could come up if this goes wrong. So on the left-hand side here, I've just got an illustration that they created. And again, this is from 2019. There was a handful of psychedelic companies at the time. It's a very different world we're living in now. But they paint this picture of these subway advertisements and this flashy marketing and advertisements. And then if we look what's happening today, it's already here. We've got billboards, even worse billboards. Sad, apply some ketamine and happy. We've got Instagram ads. This one really struck me because I looked at the top left corner, a new era for psychedelic treatment. Then you've got this actual real advertisement, a new day for noticing beauty. I mean, it's like they have the same copywriters or something. And it's just striking how precise that they were able to predict how this space would unfold. Here's another example from the same story, an advertisement posting for a psychedelic healer, $19.50 an hour, no experience necessary, come on through. And here's a job posting I found the other day as Oregon is opening up its markets now. I don't really know anything about this organization. I'm sure it's great, so I'm not trying to shame this organization. It's probably great, but just shows you the reality that we're dealing with where the job postings are here. It's an industry, it's forming. And this one is another great one, this idea of capitalism's gonna come in and look, we're gonna have all these apps and we're gonna be optimizing and all of these things. And this is a real app that exists today that's out there. And again, it's just like the landscape imagery, the way that they were able to predict kind of how this would unfold is kind of uncanny. And so the main takeaway here is if we do things the way that they've always been done, we have to expect similar outcomes. The people that wrote that story, they didn't have a crystal ball. They didn't know what the future was going to bring exactly. But the reason they were able to get it with such precision is that they understood capitalism. They understood the effects of how these spaces unfold. And if you apply those same incentives, you can pretty accurately predict where things are going to go. So now I want to change gears a bit and give you an introduction to Vine and tell you a little bit more about us. First, starting with why we got started in the first place. And it was really for two reasons. One I already kind of touched on. We're in a mental health pandemic that got exacerbated by the COVID-19 crisis, and it is just fully in the spotlight now. We need new solutions for mental health treatment. We have options that are available, and we need to bring them to people as quickly and as safely as we can. So that's the number one reason that kind of motivated us to get going. The other piece is that we wanted to have a say and a shape in how this psychedelic future would unfold. We saw that companies were forming and how they were talking about how psychedelics would only be accessed with medical doctors in synthetic form only. And it just felt like this hyper medicalized type of future that wasn't really inspiring or exciting or something that we're all coming together to work toward. And so we wanted to play a role in shaping how that future might look. So what is Vine? We're an early stage fund. Our fund one that we're operating out of is a $25 million fund. We've made investments in over 30 companies to date, and we invest across the full value chain of the space. So at the beginning, I showed that chart, and you saw that the vast lion's share has been poured into drug development as the main place that funding has gone into. We certainly invest in that area all the way upstream in companies like MAPS, for example, that are obviously working to take MDMA through the FDA process. But we also look across that full value chain and think about what are the other areas that are going to be needed to bring psychedelic care in reality to the people that need it. That's downstream, like manufacturing and cultivation. We invest in a company called Cygen. It's based in Canada. It's one of the largest synthetic manufacturers of GMP quality psychedelics, both for clinical trials and eventually for legal psychedelic care. We invested in digital platforms like Trip. Trip creates meditative and psychedelic experiences in VR and AR and uses those experiences for both prep work to psychedelic treatments and post-integration. We've invested in distribution infrastructure, companies like MindBloom that are creating telemedicine and software to aid in the psychedelic-assisted therapy process, and in companies in this broader consumer bucket like Othership, which aren't always explicitly psychedelic in nature. Othership mixes peak experiences with like holotropic breathwork with hot-cold therapy, and they center that in community to bring people together in a healthier way to manage their emotional wellness. And so we're excited by any company that's focused on that broader bucket of conscious health and well-being that really psychedelics are targeting more broadly. And one thing I really want to call out about our fund and what I think makes us most different is our reciprocity pledge. And so we all know that this space, though it's popular now and has a lot of hype behind it, it didn't happen overnight. This industry and this field has been built on the shoulders of giants. And I'm talking about both indigenous communities that have shepherded these medicines over centuries, millennia in some cases, and the work of organizations like MAPS, people like Rick Doblin, who worked over the last several decades at a time when it was really not easy to do so, when things like this could not exist. And so for us, starting a fund at a time when people are now able to finally profit off of a space like this didn't really feel right to do it in the traditional way. And so what we did is we set up this reciprocity fund to better align our incentives and give back to the community that has brought this space forward to date. And so we give back fully 50% of our profits back into the community. That goes to nonprofit organizations, academic hubs, research, goes to public education, to indigenous communities. And here's just a few examples of some of the organizations that we've been able to give back to date and look forward to contributing a lot more. And I want to talk a little bit about how that reciprocity pledge looks in reality, and some of the mechanics behind it. So I already walked through this flow of how the typical fund works, and they would normally take about 20% of the final profits over, going directly to the fund managers. And this final step that we take is we split it. So we take 50% of profit to the fund managers, but we put 50% directly into this reciprocity fund. And not only do we put it into the reciprocity fund, but it's not us as fund managers who decide and dictate where those funds go and what organizations we support. It's the portfolio entrepreneurs and the advisors to our fund that actually have the say in how we allocate those funds. So we take ourselves out of the equation fully, and it's the companies, the founders that we back and our advisors that decide what are the organizations that we feel alignment with, that we feel that we need to support with the value that's generated. It also creates a great incentive for our portfolio founders to create value with the companies that they build. The more value that's created and the more profit that's generated for the fund, the more that we're able to give back into the space. The point being, behaviors follow incentives. If you want to change the behaviors, you have to change the incentives of the underlying systems that we operate in. So now I want to go through just a few case studies of novel ways that financing can be changed with a kind of psychedelic viewpoint. So first, I'm going to talk about the MAPS regenerative financing Vine. So this was a special purpose vehicle that Vine put together last year. Special purpose vehicle, an SPV, is, you could think of it as simply another type of financing similar to venture capital, except that rather than having a portfolio of companies, it's all going toward one single organization, in this case, MAPS. And last year, we were able to raise $43 million through the regenerative financing Vine for MAPS, and we didn't take any equity. So unlike all of our other more traditional investments where we put capital in and we get ownership of the company, in this case, we had no ownership. And instead of that ownership, we provided the capital and will receive a share of future MAPS revenue that is generated from the sale of MDMA once it becomes legal through the FDA process. And the most important part behind all of this and what inspired us to design this type of structure is that it's a really interesting social experiment to take a psychedelic, to take any drug to market, let alone a psychedelic drug, as a nonprofit organization where you do not have the same incentives at play to extract as much profit as you can and just charge excessive prices. And it's a chance for us as an industry to prove to not just the psychedelic world, but the broader pharma world that you don't need to have 20-year patents. You don't need to have these high prices that only make drugs accessible to the wealthy or to people with really great insurance coverage. And you can do this in an effective way that can still scale it. So that was the real excitement behind why the structure was set up this way. Excuse me, this way. And I want to walk through just at a high level how this structure worked. So the first thing was raising the funds. The initial $43 million went directly into MAPS. Once the FDA approval kicks in, which is expected in the first half of next year, for a time period of 8 years, MAPS will share on a quarterly basis a percentage of the revenue that's generated from the MDMA sales. And then we also embedded a reciprocity component into this. So similar to what we have for our fund, we took that same type of idea and built it into this deal. And so once MAPS hits certain return profiles around the deal, this reciprocity will kick in. So once they 2x the initial investment that was made, we'll start funneling back 20% of all the revenue that they share with us back to MAPS so that they continue to invest in new research and new types of programs and remain nonprofit as they go. And we have a bit of a waterfall structure. So as they continue to return more funds, the amount that we give back in that reciprocity increases as well. So that's just one example of a way you can structure something a little bit differently. Another example I want to call out is what's called a focused research organization. So focused research organizations, or FROs, are they have a very specific use case where they're applied. You can't really apply this model in a universal way, but it's a new type of nonprofit structure. And where these models work really well is when you have a very tough science or engineering challenge, and you need a multidisciplinary team coming together, and it's challenging to do in an academic setting in a lab and make sufficient progress. And so these are really great structures to apply. They completely remove the profit motive because they're nonprofits, but you still create this sort of high growth startup-like culture. And you actually embed milestone payments where they have to hit sort of predetermined scientific milestones, show that they can create the value that they're seeking out to create before unlocking additional funding down the road. And so E11 Bio is one example of an FRO. They're creating these single cell brain circuit maps as a tool for neuroscientists. Really interesting organization. Highly recommend checking them out. And I think the other point I want to make about these is these models are really applicable when you're creating something that is open source and is something that can help the whole public domain of what you're building. And so they're building a toolkit that they expect to be really useful to different neuroscientists and people studying the brain as they continue further research in all sorts of disciplines, including psychedelics. A third and final example I want to give is regenerative finance, or ReFi. So you can think of ReFi as Web3 applying some new technologies to help us rethink ownership and reciprocity in new ways. And the simplest way to really think about this is the MAPS deal that I just went through, the regenerative financing Vine. We basically had regenerative financing components into that But with Web3 technology, you can actually code this reciprocity into the DNA of the organization or the deal that you're working on. And so with maps, we wrote up a dozens-page contract that was negotiated and sorted out. And it took, a lot of work with lawyers to figure out all of the mechanisms of how it would all work. And this can be done in a much simpler and more programmatic way where you can actually write it into the code of smart contracts itself, remove any human decision-making or biases from the process, and ensure that the aspects of reciprocity and regenerative finance are embedded into the organization or the deal for the long term and can't be modified in any way. This has already been being experimented with in the carbon credit market. That's what this company Nori does, which is an interesting example of it. But it can be applied to really any space, and expect to see a lot more types of financings like this in the future. So the main take of all these kind of case studies is that there's no rules, and it really just takes an open mind and a willingness to get creative with the different structures that you explore. We don't have to follow the traditional ways that people have raised capital in the past. There's a whole variety of opportunities for us to decide how we fund things moving forward. So finally, I want to talk about our psychedelic future and how we fund this and what we want to fund. And this is a quick snapshot of where we are today. In 2021, we were at the peak of the market. The value of all the private and public companies combined was close to $12 billion. It was ballooned with all of these organizations that were rushing to go public and capitalize on this gold rush of the space. And that bubble has thoroughly popped. We are in this trough of disillusionment now, slowly emerging. The market's lost 2/3 of its value. And the tourists are gone. The people that were in this space because it seemed like this quick way you could make money, well, that opportunity is not immediately present anymore. And obviously, there's going to be ways to make money in this space and to profit from it, but it's a much slower journey now. And so I think it's a really good time for us to kind of reflect as a community and think about, with the people that are in this room and the people that are here, these are the people that really care and want to and have a vision for the space that they want to see unfold. And want to contribute to. And it's time that we think about, what type of future we do want to fund and how do we want to see that unfold. And so we need to advocate for that future. It's not yet written. I don't know if these are the points of how the future will unfold, but these are some of the points of how I want to see the future unfold. The first is supporting liberalization. I mean, we hear so much about legalization efforts, at least in the US, in Canada, and starting in Europe as well, where we're talking about this medicalization path and access to legal medicines. But it's not the only way, nor should it be the only way that people can access psychedelics. And so we need to be supporting efforts like decriminalization, the outdated discriminatory war on drugs. Like, we're done with that era. We need to move forward and find a way to allow people to access psychedelics in the way that's right for them, which doesn't always need to be the medical pathway. And on that point, we need to start thinking about and advocating for uses for the betterment of the well. I think in the short term, we're going to continue to hear about, severe mental health issues and how we can use these drugs to really transform people's lives. That's great. Those should take precedence when people are really actively suffering. But it's not the only use case for psychedelics. And we shouldn't be, hush about these other opportunities to improve people's consciousness, let people explore who they are and become better people. Which is an equally valid use case. Another point that I want to see personally for the space is a component of naturals. And this was one of the key founding points for us as a fund. When we were entering the space, we saw this super hyper-medicalized, synthetic-only narrative being built. And I just don't think that's the reality of what people want and how all people want to interact with that. Sure, there's going to be people who will only, go into the psychedelic space and try psychedelics through a medical model who maybe will only feel safe doing it that way. And that's great. They should have the option to. But it doesn't mean that we should keep people from accessing natural products that have been around and are a part of nature and shouldn't be illegal. We're seeing that preference already in markets like Oregon, which actually banned the use of synthetic psilocybin. So you have to use natural products in the market as it's unfolding. So it's encouraging to see the industry kind of forming in that direction. Third piece is building the infrastructure. And this piece is going to be super important, especially over the next few years. The last few years, I would say, were characterized by a lot of money going into drug development, a lot of organizations being spun up to begin clinical trials. And we're now heading into what's going to be one of the largest tailwinds for the space, which is MAPS approval of MDMA-assisted therapy starting next year. And when that happens, it's not just, okay, it's legal, let's go and run away and do it. You need a lot of infrastructure to support that. That's insurance coverage, that's proper therapist training, it's care delivery software, anything that's needed to aid in the process, make it as scalable as possible, make it as accessible as possible, and make it, importantly, as safely as possible. And finally, one point I wanted to also call out is innovating on care models. It doesn't need to be that you only access psychedelics with the presence of a medical doctor. What are the different types of care teams that we can create? What are the types of situations and diverse offerings that we can create to be tailored to the specific needs of different people? Because different people are going to interact with these substances in different ways and get different value out of it. And we need to make sure that we have a variety of offerings as opposed to just one model that we funnel everyone through, because it's not going to be the model that works for everyone. So these are some of the ideas and aspirations that I hope we can work toward as a community. It's still very early. It may feel like this initial rush has really taken off, but we're in this trough right now. It's going to be a slow emergence. A lot of the kind of early bad actors are out of the space, and it's time to really think about how we want to build this in a constructive way together. There's a lot of impact that we can have together as a community, and I'm excited to see where it goes. So that's all I've got. Appreciate your time and happy to answer any questions or during the panel. Thank you.